Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is Core PCE Price Index, trading the fallout. Actually, a bit of a mislay, but we're going to look at PCE Price Index fallout today. The markets are on the move. We've seen another big-time rally in U.S. equities. We've got some trade ideas to go over that are going to come into play here in the near future. But I will say this is a bull market, and a bull market's for bulls. And basically what's happening right now to your U.S. equities shortly after the open is people are showing up with hands full of money, and they're just throwing down, and that's all there is to it. And when you start talking about throwing down, I'm talking about large-scale investiture. I'm talking about foreign direct investiture. I'm talking about the biggest players in the world have decided that they are going to say, I'm not worried about tariffs. I'm not worried about trade wars. I'm not worried about kinetic strikes. I'm not worried about bombing raids. I want a piece of the U.S. markets. And I have to tell you, all in all, I don't see any of this as being warranted, but it does not matter what I think. Let's get out to price action. You've got another big rally in the Dow. What's shaping up to be a potential trend day up on a Friday? Relatively unheard of. We haven't seen many of these lately just because of the geopolitical situation. You've got the NASDAQ. You've got a big-time headline that came out just a little bit earlier today. Right there. It was right there. S&P 500 rises to a new record at open Friday. New record at open Friday. So the S&P 500 is at all-time highs. We've got China and details of U.S. trade deals, so we knew there was a deal coming. The tariffs are never permanent. They're always just a negotiation tactic. That's all they are. Now, remember, a lot of deals come and go, and I'm going to talk about those in a minute. A lot of them came in the first term of Trump between U.S. and China that China didn't honor, that the U.S. didn't enforce. Remember, a deal is only as good as how good you are at enforcing it. So if you can't enforce your trade deals, you don't have a deal. You know, it's sort of like making your neighbors be quiet at night. Sometimes at 2 a.m. they're noisy and they wake you up. That's what happened to me last night. I'm not very happy about it. The good news is I always have something to do. I just jump on and start trading the London session. My point is this. You can't make people do what you want them to do. China confirms details of U.S. trade deal. Yeah, but it's all about enforcement. If the U.S. doesn't enforce it, or if China doesn't honor it, or the U.S. doesn't honor their end of the deal, then you don't have a deal anymore. So this stuff's all tentative, but I have to tell you that, I mean, the traders right now are just eating these headlines up. They're eating the headlines up, and I don't see any monetary policy changes. I still see real problems in the Middle East. There's a lot of reasons to be bearish here. It does not matter. Everybody's bidding, and they're bidding big. So we're going to set up an orb trade right here on the 15-minute chart, looking at the US 30 to begin this session. And I don't really know how much of an orb we're going to get today, but It's an interesting first 45 minutes. So I want to welcome everybody back. Greg Goforth, good to see you, Greg. Let me see Mucha. Good to see you, Mucha. If you guys have any questions at all, today's a great session for it. Typically, we're a little bit light on Fridays. Most folks have already kicked off for the weekend, and that's fantastic. If you've made some money, I say take the 3-day weekend and go have some fun. But if, in fact, you're interested in trading today, we're going to trade it. We're going to trade PCE. We're going to break down what the number that was and why it's bad and why that inflation's entrenched. I think that we're on the precipice of some really horrible economic numbers, but it doesn't matter right now. Remember, price action rules all. I can sit here and talk fundamentals all day. We can talk psychology all day long. What matters is what price is doing, and that's what we're here for. So let's go ahead and let's just get started, guys. I mean, that's the best thing we can just do is just get in. I want to cover PCE to begin with, and then we'll talk a little bit about our trade ideas and some of the other things that we have planned for today. But I really think that this PCE figure that came out was really bad, and I'm going to tell you why here in a second. So here we go. The PCE Price Index, also referred to as the PCE deflator, is a United States-wide indicator of the average increase in prices of all domestic consumption. That's it. Don't worry about the rest of it. The bottom line is this. PCE is the Fed's go-to inflationary metric. That's what it is. So while we're looking at CPI and PPI, the Fed doesn't really care. They like PCE a little bit better because it gives them a streamlined look at some of the more intricate aspects of consumption. Now, what do I think about PCE? It doesn't matter. I think it's an academic metric. I don't really know what it means. Nobody does. It's just a different way of presenting inflation, that inflation narrative. And today the inflation was hot. So let's go ahead and take a look at exactly what we're dealing with. These are not good numbers, everybody. Core PCE price index month over month. Core has a few things stripped out like energies, I do believe, but still prices are on the rise. 0.2% up from 0.1 and 0.1 previous. That's not good for May. PCE price index year over year came in as expected, a little bit higher. That one's not that big of a deal. The PCE price index month over month came in as expected, but take a look at this. The personal income's down. Personal spending's down. Real personal consumption's down. Now you'll notice over here, these only have 1 and 2 stars next to them, so they're not really market movers. But take the aggregate. Think of this as in the aggregate. What happened in this report? Core ticked higher. That's bad. That's real bad. You don't want to see that if you're a J-Pal in the Fed. PCE Price Index itself came in as expected, fine. That all relates to energies. I'm not too blown away with that. Personal income fell. Personal spending fell. Real personal consumption fell. Consumption and spending are what makes the United States economy go. It's a consumer economy. Listen, I don't make the rules. I just tell you what's going on. When people stop spending money here in the United States, you go into a recession, almost guaranteed. We're headed there. There's no question. Prices tick higher, personal income's down, spending's down, consumption's down. That all is absolutely terrible for the economy. And right here, this is a good look at your PCE price index. Oh yeah, inflation's coming down, right? Nope. This is the same as your CPI, very similar to a CPI chart. You're right up there at all-time highs. So what does all this mean? Clearly nothing. I wanted to start with the inflation because I think it's important that you guys have a basic understanding of what inflation is and how it impacts the markets. Right now, none of the rules matter, guys. This is 100% driven by market angst leaving the equation. Last week at this time, we were talking World War III, and when I was on Friday, I didn't already know the B-2 bombers were in the air headed towards Iran. I didn't know. Nobody knew. That's how fast things can change, especially, and I want to be very clear, especially under the Trump administration. These guys move fast. These men and women, they move fast and they move furious. And if you're not watching the news and if you're not in tune with what's going on, you need to be. A couple of things you need to watch. Number one, you need to watch any and all military action. Number two, you have to watch any and all trade deals. And probably number three right now is you're going to have to watch what the United States Federal Reserve decides to do. Right now, J-Pal's hawkish. It doesn't seem to matter. It doesn't matter. I mean, I can sit here all day long and talk about economics. We could talk all that stuff. It does not matter. What matters is sentiment is positive, and you are seeing bidders dominate the equation. Okay. The orb, the opening range breakout strategy is a big one. People really love that strategy. We get a lot of views. I get a lot of questions. A lot of you guys really love to trade it. It's easy. Opening range 15-minute chart. I prefer a 30. Most in here prefer a 15 just because it's going to get you into the market quicker, and we don't like being very patient. That's fine. Whatever suits you. I mean, it really doesn't matter. Right there, opening 15 minutes, the secondary 15 minutes. First half hour of trade, we've broken above. That first half hour, we call it A period. We've broken above A period, so now we've got a B up. All right, a solid B up. What are we looking at right now? Trend day immediately. We're looking trend to the top side. Now, the problem we're going to run into with this orb is we're already getting extended. You're seeing the big B up. The bidders are coming in. Michigan consumer sentiment just dropped. I don't know what that number is. I wouldn't worry about it too much. The PCE is the big one today. So there's a couple of ways we can approach this orb. Number one, if we get a close outside of this range, we just take the long. US 30, by the way. If we take this long, this is going to put us in a position to bet, okay, let's say it closes right around here. So for us to get paid, we're going to have to see maybe a 500-point rally because we're going to be buying in already up 322 points. I don't know. That's asking for it. I would wait and try to get a better entry. What does that mean? I'm thinking about building a video, secondary entries on the orb. And what that would be is a pullback down into your orb range after you get a bullish close up here. So let's say you get this close. I'm not interested in buying near the highs at the end of B period or midway through B period. I'm sorry, I'm not. We may miss the trade. We may not. We can wait for a retracement back down into this orb area. I love that much better. Now, you don't have to do that. Remember, if you're trading breakouts, part of the game is getting in on the move. And a lot of these moves, they come on fast and they come on furious. If you want to take this trade, you can put your stop loss right beneath the trigger bar. Now, I don't like that. I don't like it. I see it. I mean, these things pull back to the orb, inside of the orb range almost every time, but this is a hot market. So if we want to make that decision, we want to buy right here. I don't have a problem putting a stop loss beneath the trigger candle. I really don't. But it's got to be extended. So let's say price comes back down into here somewhere. Then you don't do that. Then you're going to look at putting your stop loss where it needs to be, is beneath your opening 15-minute range. Now, in my view, essentially that's going to be beneath your New York low. I love that location for my stop loss. If, in fact, we reverse and take out the New York low, it means things have really changed, and we're probably going to close negative on the day. All right, I like that. That's probably going to be a good place to get out, because if, in fact, you do blow through these overnight lows, life's tough. You don't want to be holding that long. So I like that as a stop-out point. But where should I enter if we get a big elongated candle? You can buy near the top. You got to manage that a little tighter. You're just betting that the price is going to go up. If this candle pulls back and, say, closes right in here, I think you can just play the orb as it is. But if it closes up here, something that I've shown you guys this 10,000 times, but what about combining Fibonacci's with your orb? It's a pretty good idea. Boom, boom, boom. Maybe a pullback buy from somewhere right in the center of the orb. That's not bad. That's not a bad idea. We're going to make these decisions in about another 5 minutes. Tardis, let's go. I hear you, Tardis. Let's go. If you guys have any markets that you'd like to look at, go ahead and throw them out there. I'm more than happy to cover those. So this is it. I mean, this is the headline. Core inflation rate rose to 2.7 in May, more than expected. The Fed's preferred gauge shows. Personal consumption price index, the primary inflation reading, rose a seasonally adjusted 0.1% for the month, putting annual inflation at $10 for a bag of potato chips. I mean, that's what it is. Let's be honest. I mean, I've watched the price of beer and potato chips go through the roof. Also steaks. I went to buy some steaks the other day. Could not believe how expensive red meat is. I find myself eating more chicken these days, as are most of you. It's an absolute joke. I mean, the pricing's a joke. Nobody can restore the pricing, and here's the reason why. CME Fed Watch. I'll be live with you here in the next 33 days and 3 hours. We'll have FOMC live, and I'll sit here and critique everything that Jerome Powell says, because he needs to be critiqued. He's not getting enough heat for what they've done to the financial system. Very unhappy. I'm very, very unhappy with these prices. Very unhappy. And when you take a look at something like this, we're looking at maybe a 79.3% chance that rates stay the same in July, and right there, 20.7. Now, this right here is new. We're actually starting to see some folks price in potentially a rate cut or bet on a rate cut in July. I don't believe that's going to happen. I think that's dead money. I think anybody waiting for that to happen is sort of doing that, expecting the Israel-Iran situation to blow up again. We'll see what happens there. I mean, if in fact the United States goes to a hot war, this will be 50-50. Right now, though, 80%, 79.3%. That's going to be more like 90 here relatively soon. This is the one we want to see, guys, September. Now, remember, as inflation goes up, typically you got to raise interest rates. You don't cut them. So how the heck are they going to justify cutting interest rates in this environment? And that's when we're pricing our first quarter point rate cut, and that's going to be at the September 17th meeting. Great meeting, the September meeting. I love it's right in football season, my favorite time of the year. We're going to be, when you talk about picking a time to trade during the year, you trade from Labor Day to Thanksgiving. You should be able to make enough money between Labor Day and Thanksgiving, and between, I would say, middle of January and Memorial Day. Those months should carry your trading year. They really should. And a lot of the institutional traders, that's what they do. They don't even bother with the summertime trading. They're off on their boats and yachts and stuff right now. For us, we're here. We're in the saddle. We're looking to make a few bucks, and that's good. If you want to develop your skills, summertime's a great time to do it. You're going to learn a lot of lessons. In any case, October meeting, what are we thinking? We're thinking maybe a half a point. Maybe we're down a half a point by then. I don't believe that for a minute. How about the 10th of December, the last meeting of the year? I'll have it live for you right here. What do you got? We're thinking 3/4 of a point. I would take that wager and bet against it all day long. About a 50-50 chance, though, that we see multiple rate cuts by the end of the year. So let's wait and see what happens. All right, Dre Day every day. Happy Friday, Shane. What do you think about gold? Yeah, we got to get on to some of these other markets. I've fallen way behind. Let's see. Steve Francis, can you look at the euro dollar reached 117.50? Can it go higher or due for a pullback? All right. Great questions, guys. I'll tell you what, we'll go gold and then we'll go Euro USD. How's that? US 30, I put this one out a while ago. This quadruple top, very, very important that we understand that the US 30 is probably headed towards all-time highs, just like the S&P 500 is. You'll see right here, you've got fresh all-time highs today. What would that possibly do to gold? It's got to kill it, right? It's got to bring it down. So let's go ahead and pull gold. Here's your gold chart. What do you got? What do you got on gold? I'm a big gold trader. I trade gold futures. I haven't had much of a trade this week. Last week was one of the best weeks I've ever had trading gold, if not the best. And this week has just been absolutely terrible. Okay. Just because there hasn't been any losers there. We haven't got faked out or anything, but there just hasn't been any trades. I love to trade ranges, and we just haven't made a range. I'm going to show you what I mean here in a second. This right here, this is called a failed auction. Now, if you were watching my gold analysis probably over the last month, I basically told you, I said, listen, if you break above that May high, you're going to make a new all-time high up around 3,500. We didn't do it. I was wrong. As of right now, I'm wrong, and I'm willing to say that. Remember, we don't run from the truth on this stream. When you're wrong, and you've got to learn from your mistakes. Was that a mistake saying that it was going to break high? It looks like it was a bit hasty. It means there's a hell of a lot more sellers up there between right beneath 3,500 than I thought. That's what it means. And when we start looking at exactly what can happen in these markets and how fast it can happen, why would gold possibly reverse? Looks like World War III is off the table. There's no reason for gold to reverse with these kinds of, with this kind of inflation and potential rate cuts on the horizon that are going to take inflation to the next level. You ask me, why is it doing what it's doing? It's because it's doing it. It's how the old saying goes, guys. The markets can remain erratic and irrational. Irrational is the word. The markets can remain irrational a lot longer than you can remain solvent. It doesn't matter why it's coming off. It's just coming off. Do I want to be long or short? I'm still bullish. You see the nice big rally here in gold. I mean, to ignore the macro trend is really foolish. You don't want to do that. So if you're looking at something like this, spike low, spike high, I mean, I can draw Fibonacci's all day long. Right there from October 2024's low, big time. That was a big time in the markets. That was right before the election. This was huge. And then right there, boom, November. That was before, and then boom, compression during December, and then what? You've just got an absolute breakout to the top. Well, take a look at what typically happens on inside months. This was an inside month in December, and then we got the big break, and now we're looking potentially at another inside month that's pulling back. Do I want to be long or short? I want to buy it. I want to buy gold, and I want to buy it badly. The only question is where's my trade location going to be? 31.32, somewhere down there, maybe 31.35-ish, 31.37.50. That would be great. We could do that all day long. Problem is it's about $130 away. So how are we going to execute a trade right now today? Well, the big thing that I'm looking at is the negative print. Number one, we're off about negative 1.79%. On the session. So let's go to a weekly. It's been bad. I mean, but that's to be expected. I mean, you're only down about 3% on the week. It's not the end of the world. The question is why are we down? Geopolitical angst has left the building. You can see the volatility index is down to 16. You know, everybody's bidding stocks. It's the cool thing to do. And what are we doing? We're watching gold tumble. So for me, I love to see movement. I want to see gold absolutely fall apart and give us a bargain buy. If we get down to that 31, 32 area, right around our Bollinger midpoint on the weekly, that's a bargain. That's where we're at a level of disequilibrium, and we'll have an opportunity maybe to buy this thing and stick in there and make some big money. I like that. That's my kind of cooking right there. Now, the question is what do we do right now today? And I hear you guys. You go, Shane, get to the short time frames. I want to trade it. Hey, listen, I want to trade it too. Unfortunately, I haven't really got any of those trades today. This right here, big down day. This is a trend day. Okay, you're breaking out of the daily Bollinger Bands, which tells us we're probably going lower. We may get a little static here, maybe some compression, but unless we get a big retracement, this thing's going lower. So if it's going lower, do I have a problem selling right now, even though my macro view of this thing's bullish? No, I'm more than happy to sell it. More than happy to sell it. So nice breakout. You can see nice big move, compression, break. All right, what do we do now? Let's go to a 4-hour chart. It won't be much help, but let's look at it anyways. Do we get a retracement and a chance to trade? Probably not on a 4-hour chart, not today. Spike high, spike low. We've got to see this market go up there about 32.91, maybe 32.92-ish, and then we could just take a shot. We could take a shot to the downside. That's still about, what, $27 down there? Somewhere in there. That's a move. Are we going to get it? No, we're not going to get it. Let's go to the 30-minute chart. Gold's getting pounded right now. Understand what that means. Is PCE the reason why gold's getting pounded? No. 30-minute chart. You could go spike high right there. That 4 a.m. doesn't mean anything to me. Look at how tight these 30-minute bars are. There's nothing there. There's no volume in there. All right? Big time rally right there on the U.S. Open. You had a nice sell-off right there. There's your PCE numbers. Sort of destroyed things. Bang, bang. Big sell-off, and then the buyback on the Wall Street Open. Okay, then what happened? We failed and we're coming down. Do we want to buy it or do we want to sell it? Where did we bottom at? I know we're sort of getting in the tall grass here, but this is a hard market to read today. Is it as easy as just selling right now? We've gone an awful long way. I would hate for somebody to sell the bottom. Hey, listen, right before the U.S. Open, there was a lot of folks sold the bottom. What do you got here? Is it worth buying down here? No, not really. Do we want to sell it? Probably want to follow the trend. Can you do it with a 30-minute chart? Probably not. Now we're down to a 5-minute chart. We could have sold right there on that hammer, that inverted hammer right there. Some people call it a hanging man. Great reversal. Boom. There's a hammer. There's a doji reversal. 5-minute pattern right there. That right there. Stuff like this. I probably should make another video on it. Formations like that. 3-candle formations where you've got a hammer. You've got a doji and an inverted hammer, and then the reversal. That's a pretty darn good signal that the market's topped out. Pretty darn good. Do you want to be short or long? I don't have an entry for you. I'm trying. I really am. I'm trying. And we need to show, I don't know what that is. We're making money on it, though. All right. We need to show exactly what happens when we don't watch our trade location. This is a FOMO trade. I don't recommend doing this. This is a FOMO. Sell it. Let's just sell it. Okay, what did we do? We sold with the trend. Our trade location's terrible. It's near the bottom of the move today. We just made a bet that the market's going to go lower. Now, all of our technicals show us that it's bearish. Anybody could see it's bearish. We're off almost 2%. But our trade location is so bad, selling down towards the bottom of this thing, that odds are we're going to lose money even if we're right. So placing this trade, I mean, you see the problems of trying to chase the price around. This is how 95% of traders lose money. Well, that's not true. This is how a good portion of traders lose money. 95% lose at fighting trends. So let's say, okay, Shane, I won't fight the trend. I'll just join the trend. Okay, we just joined the trend. The trend is down. What are we doing? We're getting our tails kicked. Why? Because our trade location is not good enough. We sold near the low of the day. The only time you ever sell near the low of the day is if you have a very, very tight range and you're playing a breakout. If you want to do that, I'm in. Guns up, I'm in. But if you sell towards the bottom of an extended range, you're going to get your ass kicked, and it's going to happen a lot. Be very, very careful doing stuff like this. I'm going to let that roll, and I'm going to show you how bad the damage can get. Or, hey, maybe we get lucky and it goes down. Where would you stop yourself out at on this trade? This is a bow wow trade. Stop yourself out right above that spike high. Okay? What does that mean in the scheme of things? Nothing. 5-minute chart spike high. You're sitting here going, well, I got to swing high up there. It means nothing. There's a little bit of a lesson in FOMO. Don't chase price, guys. Never chase price. Price comes to us. We get our price or we don't trade. You have that control. You have that power. That's something that no one else in the world can make you do. They can't make you dive into the market. Only you can do that. Only you can push your mouse button and buy or sell. We'll see what happens, though. Maybe we win. Hi, how are you? I'm sorry. I can't read the name. It looks like it's printed in Arabic. Very, very sorry. I don't speak it. I probably should pick up another language, get my Rosetta Stone going, and become a sophisticated presenter. But I'm just a trader, guys. That's what I am. I was called an influencer the other day, and I said I don't influence anything. I'm a trader. That's it. All right, Steve, can you look at the Euro-US dollar reach 117.50? Absolutely. Let's go ahead and look at it. I'll show you my playbook on it, and then we can look at some other strategies if you'd like. 5-minute chart, I'm not interested at all at a 5-minute chart. Let's go top down and have a good look because I know a lot of you are trading the Euro-USD. And it's your game, and I like that. Very tight spreads. It's attractive. Although right now it's about a 1.6 spread, 1.7 spread. I don't find that attractive at all. I think that's terrible. Typically, a Euro-USD spread should be a 1 pip. Check out Switch Markets. They've got tight spreads over there. If, in fact, you want to trade the Euro-USD and you're an international client, Switch Markets, bring your ambition into focus with thousands of markets, 0% commission accounts, and fast and simple funding. So you can get in on the action there, but your spread should not be 1.6. In any case, something like this, monthly chart, it's beautiful. I mean, this is, look at this doji. Right in January, you got a doji, buyers and sellers fought it out, buyers won. Compression right there. Very important to understand those compression cycles can lead to big-time breaks. Big-time breaks. Right now, you're in the middle of a big time break. I want to be long or nothing here. As far as the Euro USD goes, on my monthly chart, you say, Shane, where could resistance possibly be? And I'd say, man, I don't know. Maybe look right up there at those liquidity sweeps to sort of use some smart money lingo. Back in January 2021, maybe 2021's high. I probably would be looking at that. Maybe this entire order block is the ticket. Maybe 120. Probably would be looking at 120 as well. Maybe this zone up here. I mean, if you're going to try to pick an area where this thing reverses, you're probably smooth sailing for a couple hundred more pips. The problem is that, you got so much going on in the world and the markets. Do we get there in a straight line, or do we pull back and then get there? I would be very surprised if we don't get there. So the way that I would approach this market right now today, you can see your weekly. Weekly is a beautiful thing, really, just negative weeks. Look how small the ranges are, though. Boom, boom, and then out go the lights. Look at the volumes. OTC volumes are highly questionable, highly suspect. You don't want to sit in there and go, oh, well, the volume, because the volumes are reported by the brokers, and the brokers don't necessarily, they aren't held to the fire. It's not exchange traded. Everything that goes through on, say, a futures contract goes through the exchange to the clearinghouse, and they report the exact volumes. OTC markets are different. It's up to the market makers to report them. There really is no exchange that's going to come in and say, report the volumes. We don't really know the volumes. All we know is there was a hell of a lot more on the 7th of April than there was on the 28th of April. So really, since then, these weeks, very standard volumes. And what that means is we're just heading north. You're going to need to see a big volume spike before you see a reversal. Maybe we have the fundamentals next week. Maybe we don't. Let's take this right down to a daily. I'm still seeing bullish, bullish, bullish. I mean, this is just beautiful stuff right here. I mean, what do you want? I mean, really, what do you want? You want to trade it. So right there is going to be your spike low, swing low. That means that you're lower than the previous bar and lower than the subsequent bar. There's your spike high right around 117.54. Pullbacks all day long from 116, probably 116.50. That's a trade that I'll look at in the futures markets later today, but it's got to be a scalp because we've only got probably 3 more hours of good trading here in the United States, and then people are going to start kicking off. So right here, what do you got? Pullback zone? Yeah. Do I want to be more aggressive right now? I would say yeah. Let's go to a 4-hour chart. Okay, I can get into this. Are we going higher or lower? Last 4 hours have been a challenge. Why do you think the last 4 hours have been a challenge for the Euro USD? Or excuse me, the last hour and a half have been a challenge. It's because of the PCE number has brought about the retracement. The idea is that, yeah, inflation's ticking higher. Maybe that's going to make a stronger dollar. I don't believe it. Pullback zone right down there, 117.09. That's a pretty good scalp. Back into the golden zone. That's good stuff. Maybe 117.10. That could be a fantastic trade. 38% up there at about 117 and a quarter. You probably could buy right now and get away with it. You probably could. As far as, I mean, we could put a position on right here. I like this trade a heck of a lot more than the gold trade. And you say, Shane, you just bought it at market and you sold the other one at market. But here's how this is different. We know we've got an uptrend. We've got good pressure. We know we had an economic event that brought on the retracement, and now we're sort of stalled out right here. So you say, well, yeah, but what about your trade location? I said, what about it? We just bought right around the 38% level. We failed at 50%. I would have loved to have got in at 117.10. That would have been what I would have liked to have done. I just don't know that we get it. Extremely bullish day, extremely bullish month and week. You got to, you got to make your decisions for yourself. But one of the best things about this trade is right there. There's your stop beneath 116.83. If I'm long from 117.25-ish, somewhere in there, what are you looking at? 17, 25, 42 pips. This would be a trade that you could take. Now, here's the problem with taking this, though. This on the 4-hour chart is going to turn into a swing trade. You're going to have to hold this thing to get any money out of it. In order to do that, you're going to have to hold through the weekend, which I think is extremely dangerous. I would love to take this trade on a Monday, Tuesday, Wednesday, because let's think about it. If we get this trade on a Tuesday, I just let it run. I let it run. I put it down. I put my stop loss, my profit target in. I give it a big salute, and I'll see at the closing bell Friday with my money. We can't do that here, and the reason why is we're going into the weekend break. Anything can happen right now. So if you wanted to take that trade intraday, I wouldn't eat your lunch for it. I mean, we're printing 117.22s, somewhere in there. If you wanted to buy, I personally, if you're disciplined, I would hold out and wait for 117.10, maybe 117.11. I love that. That gives us a real chance to rotate back up to that quarter handle and maybe grab 15 or 20 pips by the end of business today. I would love that. The question is do we get it? And you know the answer, probably not. But you never know. We're coming off right now. See, we're underwater. That's why your trade locations need to be dialed in, although our trade location right there is not bad. It's not bad at all. We'll let it run, see how it goes. That's for sure. Let me see. Nathan Mocha, good to see you. Yes, mate. Love your signals, but would you ever be able to make longer TPs for the signals because I'm still using small lot sizes so I don't make dropping the hard F-bomb, Nathan. I hear you. I drop about 300 of them a day, just not on live stream. Longer take profits. I mean, I've been criticized a lot over the years for my short take profits. I don't particularly believe in longer take profits, but we did put one out yesterday on the US 30 that's a short from right in front of 45,000, and you're looking for about 725 pips. So that's a pretty good chunk of change. So I would definitely be check out our trading signals inside of the trading room. Just go up and click on me, follow, or check out our analysis thread. You'll get those trade ideas. What I like to do in these sessions typically is just scalp. And the reason why is I can hit it with a high probability, although we're getting our lunch eaten on this trade. So my own personal approach, Nathan, is I use a lot of leverage and I take small points. That's what I like to do, true tick scalping. Is that successful over the long haul? It keeps you around. I mean, it'll keep you around. Whereas waiting for those 1 to 4s, 1 to 5s, and 10 to 1s, honestly, it's outside of my sphere of expertise. It really is. About all I can do is identify a trade, give you a stop loss, and then just tell you to let it run. And there's so many different factors that go into that. That's why most traders that do that are not successful. There's a lot of lucky ones on YouTube. There's a lot of lucky ones, but I haven't seen anybody that takes 10 to 1s, stuff like that consistently. They're riverboat gamblers, and that's okay. Hey, listen, I told you, I love gamblers. I love thrill seekers. I am one. But when it comes to the markets, I don't gamble. I'm not interested. So sorry, Nathan. I like to keep it conservative. I like you guys winning. I like you guys taking money out of the market all the time and then trying to figure out exactly what you're going to do with your future from there, from a position of strength. Let me see. Hushang. Good to see you, Hushang. Welcome. Thank you for spelling it out. I appreciate it. Euro Kiwi. We looked at the Euro Kiwi yesterday. I'll do it one more time. And then Omar wants to look at natural gas. Okay, we're going Euro Kiwi, and then we're going natty gas. Let's see what happened with our orb, though. We had a cute little orb. Well, I mean, is it a bad trade? I don't know. Where's your entry? Your entry would have been somewhere right in there. You could have waited for a pullback into the orb range, which would have been beautiful, right? You'd be ahead right now, about 38 points. Not bad. Not a bad start on the trade. If you're here, you're still in bonus territory. Stop loss is down here, but make no mistake. If you took this trade, you're betting on a trend day up. You're probably going to need to, well, what are you going to need to get? If your entry point's right around 43,692, let's say you're right around 43,692, and your stop loss is at 43,526, that's about 170 points. So you're going to have to be up here in the 860s somewhere to make this thing even a 1-to-1 winner. What does an 860 gain give us from right now? What is that, about another 170 points? So you're going to be looking for that 500-point close, positive close. A trend day up on a Friday? I think it's highly questionable. Could happen, though. All right, guys, Euro NZD and the natural gas, and then we're going to go home for the weekend. How's that sound? I got to get some sleep one of these days. Okay, great call on this market right away. There's one thing I see jumps off the chart at me, and I want a piece of it right now. Spike low there. Spike high there, pullback zone. Kill zone's right around 193.35-ish, somewhere in there. There's your pullback bid. Is this a trend? No, not really. It's pressure. It's bullish pressure. A better trade's to wait right down here for about 193.06, maybe 193.09. Get comfy in that golden zone, set up shop. That's what a winning trade looks like. That's a high probability trade, especially if you can get it today. I just don't think you're going to get it today, but maybe 193.06 or 09. That would be one I'm watching for early next week. We already did the long-term analysis yesterday, so if you want to see the Euro NZD top to bottom, just go back and check it out. Check out yesterday's stream. We nailed this one for quite a while. All right, natural gas, natty gas. 3549. Okay, there's a couple of things that I do want to stress with natural gas, and we got to throw this level out there because it may, in fact, come into play. And if it does, I don't want you guys to miss it. We're one of the few. I guess that counts all the voices in my head. I'm one of the few analysts out there that will look at the macro picture and sort of give you levels based on what the broader market state is, what an idea of price action given huge events, huge global events. This is one chart that we need to understand. Russia, Ukraine, those highs right up around 10, and then there's your spike low. That's not an accident. And we outlined that ahead of time, way ahead of time, 474. Write that down. Understand that that's a huge level. Now, what's happening here this month, especially this month, typically when we go into the summertime, natural gas is bearish. Now, traditionally, you use less natural gas in the summer because the Northern Hemisphere, specifically here in the United States and in North America, you don't have to heat your homes. So you use less natural gas to keep your home, livable. Well, that's changing. Heat wave here in the United States has spiked consumption, and the reason why is we're using a lot of that natural gas to go ahead and get tough with those air conditioners, running those ACs all the time. That's one thing. The other thing's AI, running the computing power that is the backbone of the AI industry. A lot of folks, they're leaning on nuclear. Don't get it twisted. It's going to be nuclear that powers AI, but in the meantime, you're still on a fossil fuel grid, and natural gas has sort of been the big winner from the AI boom. Take a look at when those stories. Remember those stories last May? I remember writing about it a lot. A bit of a pullback, and really AI consumption's through the roof. So to the top side, you've got to be looking at 474. That's a major sell. You don't want to get left out in the cold there. But until then, is this month bullish or bearish? Neither. You're still trading inside of April, May, June. I mean, it's just sort of I'd call it a duck. Nothing's happening. Potentially a pullback bid there. Do you want to buy it or sell it? Daily chart. Okay, this is giving us something. Look at a little bit of an opening gap there. Filled that gap in. This gap right here got filled. Now we're on the rally north. Spike high, spike low. It's probably a sell right now. It's probably an intraday sell. Would this trade be lucrative? Well, you can see price action isn't really moving. Nothing's going on with natty gas. It looks to me like a real low volume day. You're up about 4.6%, 5%. Is this the end of the road? More than likely 3558, 355. Probably the end of the road here for the intraday action. The reason why I say that is you've got two things working for you. Number one, you've got 3546, which is a 13-period EMA. Then you've also got 38% level, which is a daily 38% at 3558. Let's go down to a 30-minute chart. If price breaks through this resistance zone, it's gone. Then you're looking to trade your golden zone somewhere up there right around 374, and you'll get that probably early next week, depending on what happens over the weekend. 30-minute chart, what are we doing right now? It's on. So, I mean, if you're taking this is a short. This is a sell. This is just a short. What do you have right there? Daily 38%, 13-day EMA. I would be very comfortable taking that short right now. Here's the thing. The market's not moving, and there's an old saying, never sell a dead market. Well, maybe you want to wait for some confirmation there. I don't know. I mean, this trade right here has everything I look for. Look at this RSI. RSI is deep in overbought territory. You've got a couple of key levels up there. You have an opportunity to take that short. That could be a real big trade. Market's got to move, though. And do you want to hold this over the weekend? And the answer is a resounding no. If you take home natural gas positions over the weekend, you are truly rolling the dice. And I like rolling the dice as much as the next guy. That's rolling the dice. All right, everybody. I think that's going to be a wrap today. Let me see. Justin, I spotted the same long position on the Euro USD using fib and fair value gap at 117.09. Love it, Justin. 62% very rarely will lead you wrong. Very rarely. And a bullish trend on the 1 hour. Yeah, I'm just really skittish about Friday intraday action just because I know how fast it can dry up. That's for sure. 3 confluences right there. Yeah, the more action you get at a level, the better off you are. So like this natural gas trade, I've got 38%, daily 38%. I've got a 13-day EMA. Typically, when those two things line up for me, that's a solid trade. However, it looks like low volume, and that's really one of the only things that can beat us is low volume and really nobody stepping up to sell. Got to remember, if nobody's in the market, who's going to move it? That's hard. That's the $1 million question, the $1 trillion question. All right, so we're going to go ahead and monitor that. A couple of other things. Let's see how our US 30. I mean, this orb is looking good. That 15-minute orb is looking good. We're looking at a trend day up here in U.S. equities. If you're trading that 15-minute orb, and I know some of you are, all the best. Best of luck to you. Remember, I will give you an important safety tip. Let's say price gets up into here, and you're getting on later into the session. I don't know anybody that's ever gone broke taking profits. I wouldn't be afraid to rack them from right there. At least, if this does trade way up, at least make sure you don't lose any money. You can't give it back any losses there. Carrying anything over the weekend is highly, highly speculative and is a real challenge. Let's take a look at our duck. This is why you can't trade like this on gold. I told you. This is a duck. We sold just to sell. Look at that. We didn't have any reason to sell that thing other than, well, I'm going to follow the trend. Don't think like the herd. This right here is how, listen, the market's out to get as many people as it can. Think of that personality. The market has a personality, and it's not a pretty one. It's a bad one. The market lives on your money. It lives on taking money from people. It lives on it. When does it get to take the most money from people? When they're desperate and when they're chasing price around. Desperate to get a trade and chasing the price around. These markets will take everything you have and then some. But if you're disciplined and you wait, then you have an opportunity potentially to get in and make some. Now, I always say that a good trade has three parts. It's got an entry point, it's got a solid stop loss, and a legitimate profit target. Those three things are what make a trade. We didn't have any of them right here. We didn't have any of them. Remember what I told you about that? I mean, I hate saying I told you this, but I hate it. I hate people that say that. It's ridiculous. Remember the point that we made a little bit earlier, though, about that spike high? That 5-minute spike high really would be the only legitimate place you could put your stop loss. It meant absolutely nothing. It meant absolutely nothing. Price reversed, took you out, and now it's back in the game. Odds are your average retail trader that just jumped into the market and tried to chase this trend to the downside got killed right there. You got destroyed. You got stopped out, and now the market's back, and you're sitting there. You're angry because you lost money, and you're going to miss out on the bearish move that's going to pay you off and make your dreams come true. I have been there more times than I can count, and that's why I don't do anything unless I have not good trade location, but great trade location. Because at least if I lose there, I know I did the right thing. Sometimes you tip your cap and you go, all right, they got me. My trade location was wrong. I go back, double check my analytics, make sure I got my ducks in a row, and I get ready to roll on the next trade. This right here didn't have any of those components. You had garbage entry. You had a garbage stop loss. Maybe your profit target was legitimate to follow the trend and challenge daily lows. Yeah, all right, that's legitimate. I'll give you that. But the rest of it, garbage. That's why we don't trade like that. That's a textbook example and a great learning moment. I'm fascinated by natural gas, though. I'll tell you that. All right, guys, I'm going to go ahead and sign off. Omar, thank you for your time. I know, Omar, I'm going on fumes right now. We ran way long today, though, but it was a great opportunity to talk some psychology with you guys, and I'm sure happy that everybody showed up today. Fridays are usually light. Decent week for me personally. Decent week. Having trouble, though, a little bit of bouts with insomnia. Haven't slept in a few days. I'm going to retire out to the country for the weekend. I'm going to go up and I'm going to chop some firewood. I'm going back to the hunting lodge. We're going to chop some firewood. We're going to sit on the deck, maybe work on the tan a little bit, and really recharge those batteries, get a couple nights of good sleep. That's what I'm looking for. If you guys feel like I do today, where you're tired and you're run down and you're beat up a little bit, get some rest. I'm telling you right now, when I'm done today in about, 3 hours or so, when I'm done with this, I'm not looking at the charts again until Sunday night. I'm not watching. Well, I have to watch. You got to watch the news a little bit, but I'm not looking at the charts. I'm not speculating on where price is going. I'm not even thinking about any of it. If you're going to be in this game a decade plus, 15 years, you learn about 5 years into your career that you got to shut it off. Learn to shut it off. That's as valuable as anything I could ever teach any of you. All right. Absolutely, Steve. Thank you. Thank you for the question. I appreciate you joining the trading room as well. If you guys have any questions at all, be sure to swing by the How to Trade trading room. Send me a private message. I'll be sure to get back to you. As far as what we've got on tap for next week, it will be posted in the How to Trade trading room. I have to go through and schedule the streams, but I do believe we'll be live every day, and that's what we're going to do. Remember, check out switchmarkets.com for your trading needs, and also see if you can't potentially, if you're a Switch Markets client, you're going to get our weekly newsletter, so you'll get the pick-to-click trade of the week. You also get a bunch of analytics. That's a wrap. I'm out. You guys have a fantastic session. Have a great weekend. Put this stuff down. Get away from it for a few days. Believe me, we're in for most summers are dead. This one's not. This one's alive. It's alive, and I love it. We're going to make a lot of money, so let's do it. All right, everybody. Thanks for joining me. Trade the action well, and we'll talk soon. See you.